Hi, Jonathan York from Bay Financial Partners, looking at investment markets. The coronavirus is still sort of taking headline news and really centre stage. That really caused a pretty severe sell-off in global equity markets. Started in the US on sort of Saturday morning New Zealand time, and really continued through onto Monday. But then almost as quickly as that sort of came through, markets have sort of recovered, and certainly in the US has pretty much reversed the 600-point loss we saw, say, on Friday US trading time, and that market is now pretty flat. Now, obviously, events to try and contain the virus, with sort of border closures and sort of banning flights, etc. Potentially sort of closing the door after the horse has bolted, but it is a sort of an effort really to try and contain the virus. Although if you look at the stats, it's all really very interesting. You've seen just over 400 deaths from around 20,000 cases. That's a mortality rate much lower than SARS back in 2003. Also interesting as well, obviously, was the building of the hospital in Wuhan, the sort of epicenter of the outbreak. That hospital was built in just under 2 weeks. That will house supposedly around 1,000 patients. Now, while obviously it is going to have an impact on the global economy, certainly oil suffered pretty majorly. That's below $50 a barrel. But really, it's just a question of the longevity of the sort of slowdown and the impact. Is it just going to be a little sort of speed bump, or is it going to be more of a prolonged sort of impact on the global economy? Elsewhere, earnings season still going pretty well in the US. Most of the big sort of corporates are recording some pretty interesting earnings. Most of them are sort of beating the street quite easily. Obviously, there'll be a little bit of guidance going forward for the first quarter with the impact of this coronavirus. And then it's just going to be interesting to see how it sort of plays through in really sort of the second quarter and the second half of 2020. A little bit of embarrassment on the political front for the Democrats. The Iowa caucus really sort of thrown into a little bit of disarray with a technical glitch, which sort of resulted in results really not being able to be published as expected. And then, pretty much as expected, President Trump has now claimed that's a victory for the Republicans and him personally, as the Democrats really aren't fit to lead and don't really know what's going on. Interestingly, though, the sort of issue of sort of outside interference, potential hacking into the technical glitch hasn't really been raised yet. No doubt there will be some sort of conspiracy theorists out there who will have some interesting ideas on this. Obviously, though, as we're now getting started on the sort of political campaign towards the 2020 November election, it is going to be very interesting to see how it sort of plays through. Obviously, New Hampshire will be the next sort of key date, and it's just going to be interesting to see how the Democrats perform in that. In the UK, Brexit has now taken place. The UK has formally left the EU, and it's now just that sort of transition period. Again, there seems a little bit of confusion out there as to what really is going to happen. a lot of negotiation needs to take place now in terms of sort of trade deal, borders, etc. And really the key date now will be that sort of EU June summit to see how talks and sort of deals are progressing. But certainly, in essence, there's really very little difference between the sort of 30th of January and the 2nd of February. Here in New Zealand, obviously, we will get a little bit of impact from the coronavirus. Certainly, Chinese tourists will be down because of the travel restrictions, and that's just going to be interesting to see how this sort of impacts on the economy here. But to help counteract that, you've got that sort of big boost to the economy from the fiscal input and fiscal spending from the government. You also got housing prices as well, sort of pushing up, and that's really potentially maybe leaning the Reserve Bank now to be sort of more neutral on the OCR rather than looking for a further cut later in the year. Because certainly the economy is still pushing along at a reasonable rate, just over 2%. And with that record low unemployment, you've still got pretty benign inflation out there. The economy doesn't look in too bad a shape. Now, as always, if you are looking for income options, it is pretty tough out there with sort of TD rates now below 3%. That's a gross return. If you are looking for income options, say call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.